Hi, my name is George Dagnino. I'm the editor of the Peter Dack Portfolio Strategy and Management. When the U.S. stock market doesn't perform well, you hear that Wall Street advisors suggest, you should invest in foreign markets. Well, what this short video is going to tell you and show you what really foreign markets, how they behave when the U.S. stock market doesn't perform well. Of course, the stock market, as you well know, reflects the business cycle, how business is growing in each country. Now, the OECD, which is an international organization in Paris that measures and monitors the growth of the developed economies, shows the business cycles in various countries. And this is what they show every month around the 10th of the month. And this is China. Notice how they went up, went down, went up, it went down, and then the economy strengthened and weakened. The same thing in Japan. It peaked in 2010-11 when the economy slowed down, strengthened again until 2013-14. Then it went down again, it strengthened again until 17-18. It weakened until 2020, and then went up until 2021-2022, and now it's slowing down. Now, the U zone has exactly the same pattern. 10-11 slows down, strength until 13-14, slows down until 17-18, then slow down until 2020, strengthen until 21-22, and weakens. The overall global economy, this is a classic business cycle, and that's how they behave. Exactly all these countries in the whole global economy has the same turning points. Now, I want to show you the rest of it and what are the implications for investment purposes. This is the business cycle, this graph at the bottom panel, as we computed from strictly market data. Forget about economic data printed by the OECD. And as you can see, the turning points of this indicator as measured by market data from the US stock market have exactly the same turning point. It peaked in 10-11, the economy weakened and strengthens until 2014, then weakened and then strengthened until 2018, and then strengthened again 2021, 2022. The first important point is that all the economies behave exactly the same way. They all have the same periods of strengthening and weakening and are totally, completely synchronized. Now, let's now turn to the stock markets of the main countries. This is the United States. Notice how the United States reflects this rising economy, slow down, this is the next cycle, slows down, this is the next cycle, and comes down. So all these cycles here have followed the period of strong growth in the market, weaker growth, strong growth, weaker growth, strong growth, weaker growth, and so on. So now let's see how the other markets are performing. This chart shows the pattern of the European stock market as measured by the ETF IEV from 2007, when the great financial contraction started, and until the recent 2022. The panel here is some buy and sell indicators, and this is the relative performance. When this curve declines, it means that the market, in this case the European market, is underperforms the US market. But so you can see, given the bad economy that Europeans have, the market has not done anything until since 2007 to now. It went up from 2009, but it's just to recover the losses that they had. From a business cycle viewpoint, as you can see, even the European market follows exactly the upside down of the business cycles. So the European market, they seem to have a different economy from ours, from the rest of the world, because of the energy issue, whatever, but they still follow the basic synchronized pattern of the global business cycle. This is the chart of the Chinese stock market, and as you can see, like for Europe, probably because they are two different forms of dictatorship. One is a political dictatorship. The European, they have a bureaucratic dictatorship. But the bottom line is the economy has not done anything, and the stock market, the Chinese stock market, has not done anything either. These are the usual buy and sell signal, and this is the relative performance to the U.S. market, which the curve going down. The Chinese market underperformed badly the U.S. stock market. In spite of their form of dictatorship, you can see the Chinese stock market follows exactly the global bull market, the global business cycle, with its ups and downs, reflecting exactly the business cycles of the global economy. Some strategists, when they feel that the U.S. stock market is not doing well, they always say, you know, the emerging markets have a great opportunity. I'm not sure how they get that idea, but anyway, this is the chart of the emerging markets and the ETF. And as you can see from the great financial crisis to now, the EM in dollar terms has not done absolutely anything like all the other markets. This is the buy and sell indicators, and this is the relative performance to the US market. And what this downtrend means is that they always, since 2007, they have underperformed the US market. So again, all the markets are perfectly synchronized among themselves, the bottoms and the tops, and they're absolutely synchronized to the business cycle, even the EEM. The ups slow down, stronger growth, slower growth, stronger growth, slower growth, stronger growth, slower growth, exactly like the US market and like everything else. This is the chart of the English stock market, and as you can see, the ETF is EWU, and like the other markets since 2007, they have not done absolutely anything. I know they seem the same charts, right? But that's the whole point of this presentation. You see, everything looks the same. But the important thing is that they follow the business cycle. Look at the ups and downs. It doesn't matter what is the language, what is the political system, how much bureaucrats they have, how much dictators they have. The pattern is always the same. Poor performance and ups and downs following the global business cycle. This is the chart of the German stock market, EWG. Of course, all these ETFs are in dollar terms, so they reflect the strength or weaknesses of the dollar. But the bottom line is this market, they do anything like the other markets, follow exactly the business cycles, the ups and downs of the business cycle. This is the buy-sell indicator, so that still was on a sell here and is still going down, and it's underperformed the U.S. market. Of all the stock markets, this is probably the one that has performed best, but still, if you look at the relative performance, they are still at the same level of 2007. Is on a sell signal here, is underperformed the U.S. market, and in spite of having different political system from the Chinese, from the European, and from the U.S. market, they still follow the global business cycle, which is, just to remind you, is the same as our own business cycle. Sometimes you hear that the South Korea economy depends on the global trade, which is probably true. And if the trade grows, so grows the South Korea economy. But the bottom line, again, from 2007 to now, in dollar terms, the South Korean stock market has not done anything. And like everybody else, it doesn't matter if you're in Europe, in Asia, wherever, you still follow the business cycles, the ups and downs, and now the global business cycle is going down. The U.S. business cycle is on a sell signal since 2021. So this is not a optimistic view of the stock markets, both for the U.S. and the international markets. But the bottom line is the US stock market is the strongest of the pack. Well, I hope you enjoyed this short video, but just to give you an idea that, when people say invest in foreign countries, be very, very careful. And when people say, well, the Chinese economy is strong or the European economy is strong, be very, very careful, because all the economies are perfectly synchronized and all markets are perfectly synchronized. So when you invest in a foreign market, you are not investing in a trend that will edge the trend in US. You just invest in strictly volatility because you think it's going to go up more than, let's say, the German market, going to go more than the Japanese or the Chinese or the US market. So buying in foreign markets, you're buying volatility. You don't buy growth. Again, this is the kind of stuff that I wrote through the years. I'm very proud of what I publish every 2 weeks. You can get a free subscription, complimentary subscription here if you want to. This is a book, quite frankly, that I think is excellent. Has been commissioned by McGraw-Hill Education. Is available second printing, and it describes the business cycle in extreme detail. Was the outcome of an MBA program that I taught for many, many years. I also wrote 2 more books. Again, thank you very much for following my rumbling, and I hope what I said has been useful to you. Take care and try to be careful. Bye-bye.